What is going on, guys? We are back again for another video here, and we are going to discuss hedging with the 112 strategy. So a dedicated hedge based on the 112 that pays you instead of you paying for the hedge. Yeah, you heard me. You heard me. So let's get stuck right into this, and I'm going to show you exactly what I mean by this. So you can do this on any time frame you want, but I'm going to do it on 104 days to expiration because, as you guys know, I like between 100 to 130 for the 112 strategy, but you can do this on any. But for this example, 104 days to expiration. Now, you can see I've got a lot of other positions open here on this date, so just ignore those, and I'll show you what I mean. So, if you wanted to hedge your account out for a market pullback, so what I mean by that is we want to make money as the market falls. So I'm actually going to show you what this would all look like once all pieced together. So if we go to here and we buy the 5400 put and we sell the 39 or the 5350 put, what you can see here is this is going to cost us $40 or $39. But we get a max profit of 210. So if the market was to pull back below 5,400 within the next, what's this, or at 104 days, so if we see a nice little market pullback, you're set to make 210, but you got to pay $40 for it. So let's fix that. Let's go all the way down. Here's your 1 standard deviation move. Here's your 2 standard deviation move. So 95% of the time, or 96% of the time, it's going to be above this. So we're going to even go below this. And we're going to go all the way down to a 0.1 delta, right? And we are going to sell 2 of these. Now would you look at this? The trade now requires 450 in buying power, but it pays you $9. So that'll just cover the fees. It pays you $9. And you get a max profit of $259. So this is a free hedge. These 2 puts that you sold down here, which you're never going to hit, let's look at how far out of the money those are. We go to MES. You know, 28% out of the money. How many of you guys think the market's going to fall 28% in the next 100 days? Not me. Certainly not me. Okay? So this is why I like these trades. You can stack these on and they are just a nice hedge. So yeah, the market is not going to drop nearly 30% in the next 104 days. However, can it drop to the 5350? Let's check. 5350. How far of a pullback is that? It's only that's only a 5% correction, guys. So if we see a 5% correction, this trade would print. This would be, it's a lovely way to hedge your account out. You can do this on ES as well. Now let's demonstrate doing it on ES if you've got a larger account. I personally do it on both. So we're going to go 104 days out. We're going to buy this. We're going to sell this. Exactly the same. And we're going to sell 2 of the... Here we go. So now what you can see is, in fact, the buying power is actually less for me. The buying power is only requiring 300 buying power. I actually might enter something like this coming Monday because the buying power requirement there is absolutely beautiful. But look, as you can see, it's paying me $123. My max profit is 2.6k. I will make 2.6k if the market pulls back 5%. But I still collect 123 even if it doesn't. And I only start losing when it goes below 4,000 at expiration. It's magnificent, guys. This really is really powerful when you're trying to hedge out your futures account. There's obviously multiple ways you can do this, but I did want to bring this one to you. You can play about with the strikes. If you wanted a more aggressive hedge, you could, or sorry, a less aggressive hedge, you could do the 5,000. So you buy the put debit spread here at the 5,000. You could sell one of the 4,000, so you've reduced your risk massively. It's still paying you $135. Still paying you $135, and you've only sold one. And your max profit is 2.6k. If we get a market pullback to the 5,000 range, or you could play about even further. If you want a more aggressive hedge but further back, you can simply drag these apart. So look at this now. What we can see here is if I now sell two of these to make up for the credit, there you go. This is now going to pay us $115, but we have a max profit of $10,000 if we get a market pullback below 4,800. You'll make $10,000. And in fact, let's see if we can make this a little bit more aggressive and see how wide we could get it. Okay, this one here looks pretty good. So you're collecting $60 and you've got a max profit of 5,000. If we see a one standard deviation pullback, I think that's like 68% of the time it'll be outside of that range, but it could fall down into the one standard deviation move pretty easily on a market pullback, and you'd make $5,060 if this expired down there. That is fantastic, guys. That really, really is. And again, you can go safer, pull this back further, so you can sell the 3700s, and you can simply just make this smaller. So like, would you look at this, guys? This is crazy. $170 you're collecting with a 2.7k max profit, and the market just has to not pull back to 3700, which is, I will tell you right now, 3700. A 34% correction, guys. It's not happening. It's not happening. That would be one heck of a chart to look at anyway. I'll tell you that right now. Anyway, guys, thank you for watching. Any questions you have about this strategy, drop a comment. And as you guys know, link in the description to the Discord. You're free to join. We have a lot of analysts and we have a lot of options coaches. All my trades are posted there. You can see everything's posted here. We've got a lot of free things for you guys. Yeah, come join, and I'd like to see you guys there.